Hey, it's Monday, October 27th, 2025, and I'm Dave Sobel. 4 things to know today. Small business confidence dips as inflation fears climb, putting pressure on spending. Gartner projects global IT spend to top $6 trillion by 2026, fueled by AI integration. The Cannata report shows most office tech dealers still treating managed IT as a side hustle, while top performers surge ahead. And TD SYNNEX reveals partner growth slowing, but optimism holding strong as specialization becomes the winning edge. This is the business of tech. According to the latest CNBC SurveyMonkey Small Business Index, 71% of small business owners are concerned that inflation will continue to rise, marking an increase from 66% in the previous quarter. Only 28% of respondents believe inflation has peaked, down from 32%. Rising prices are the top concern for 24% of small business owners, who view it as the greatest risk to their operations, overshadowing other issues like consumer demand and supply chain disruptions. The survey findings suggest that business owners may need to adjust pricing strategies and enhance customer engagement to navigate these inflationary pressures effectively. Additionally, rising operational costs pose a challenge, especially for smaller enterprises with thinner profit margins, highlighting the need for strategic adjustments and efficiency improvements. IT spending is projected to exceed $6 trillion for the first time next year, according to Gartner's latest forecast. The analyst firm anticipates a growth rate of 9.8% year over year, driven largely by increased investment in data center systems and software, particularly in response to rising demand for artificial intelligence service. John David Lovelock, Distinguished Vice President Analyst at Gartner, noted that while organizations are currently navigating a period of disillusionment with generative AI, its features are now integrated into existing enterprise software. Despite optimistic forecasts, companies face challenges, including constraints on computing resources and outstanding governance tasks. Lovelock emphasized that the push for AI infrastructure has heightened demand for AI-optimized server racks, although supply limitations hinder server demand growth. Gartner further predicts that enterprises will invest over $37 billion in AI-optimized infrastructure as a service by 2026. Why do we care? Well, here's the split. Small business owners are more worried about inflation now than last quarter. 71% think prices will keep rising. That means they're cautious, watching expenses, and not spending unless it clearly improves efficiency. Now we flip to Gartner, who's calling for IT spending to break $6 trillion next year, growing nearly 10% a year. That sounds huge, but remember, most of that is enterprise money, not small business checks. Gartner says we're in the AI disillusionment phase. The hype's cooling off, but the tech's quietly becoming part of everything else. So what does that mean? Your clients aren't chasing AI moonshots. They want to cut costs, automate tasks, and fight inflation. The smart move is to connect tech spend to ROI. Faster processes, fewer tickets, less waste. Inflation isn't killing tech spending, it's redefining it. Those who can prove efficiency will win the next wave. And that's why we care. Still relying on security tools that only tell you what already happened? By then, it's too late. Token theft bypasses multi-factor authentication. Your SOC, SIM, and MDR can't catch it in real time. Even Microsoft knows it's a gap, and MSPs are left the risk. That's why there's SaaS Alerts, the only cloud detection and response platform built for MSPs. Get real-time monitoring and automated remediation across unlimited SaaS apps, plus Microsoft 365 security policy configuration, all for one low price. And your MSP tools, protected as well. Stop reacting. Start preventing. Visit saasalerts.com/MSP Radio. According to the Cannata report's 40th annual dealer survey, nearly half of the 415 surveyed office technology dealers, or 47%, offer managed IT services, a figure that has remained unchanged since 2023. Despite this, these services constitute only 7.6% of overall dealer revenue in 2024. Among dealers engaged in managed IT, 73% reported an average revenue increase of 28.8%. Interestingly, a majority of these dealers, at 65%, built their managed IT offerings themselves, while 27% choose to partner for IT services and 20% opted for acquisitions. This indicates that while the sector shows potential for growth, many dealers are not fully leveraging managed IT services to enhance their business. Rich Freeman's channel Holic covers the AI bubble, which might not affect MSPs. The article discusses the potential risk of an artificial intelligence bubble, noting that prominent figures like Sam Altman and Mark Zuckerberg acknowledge the possibility. According to JP Morgan Chase, AI-related stocks have significantly contributed to the S&P 500's performance, accounting for 75% of its returns and 90% of capital spending growth since the launch of ChatGPT. However, analysts for Omdia suggest that managed service providers may not be severely impacted by a potential bubble burst, as most major AI innovations are spearheaded by large corporations like Amazon Web Services, Google, and Microsoft, which have collectively committed $360 billion to data center spending in 2025. Despite the looming concerns, the demand for AI services is escalating, with 82% of end clients planning to outsource more this year than last, indicating a robust growth trajectory for managed services in the tech industry. Now, why do we care? Cannata says half the copier dealers do managed IT, but it's 7.6% of revenue. That's not a business model, that's an add-on. The ones who are doing it right are growing almost 29%. So capability isn't the limit, maturity is. So over to channel Holic. Everyone's fretting about an AI bubble. It's fair. I am too. Also fair, the $616 billion AI build-out hasn't landed in the channel's pockets. But look where the actual wins show up. Cash gets collected faster in AR, incidents close faster in IT. Real outcomes, not just hype. And customers plan to outsource more next year than this year. So my take? Providers are not chasing GPUs, own the data plumbing. Pick 2 vertical use cases you can prove with numbers, like cost reduction or mean time to resolution cuts. Build small agents to automate those workflows, and then sell that IP again and again. And those dealers set attach rate goals and prune any SKU that doesn't clear your margin target. The bubble, if it pops upstream. Downstream, where MSPs live, customers still pay for outcomes. Be the team that delivers them, on purpose, with metrics. Well, after all the busting on Intel, the company reported better than expected revenue in its third quarter earnings, generating $13.65 billion, surpassing analyst estimates of $13.14 billion. The company noted a significant net income of $4.1 billion, a stark contrast to a loss of $16.6 billion in the same quarter last year, largely due to a recent $8.9 billion investment from the U.S. government. This is their first return to profitability in nearly 2 years. CEO Lip Bhutan emphasized the importance of this partnership in enhancing semiconductor production in the U.S. Moreover, Intel faced challenges with supply outpacing demand, but anticipates continued growth, particularly with its recent collaboration with NVIDIA. The partnership aims to integrate Intel's processors with NVIDIA's AI graphics technology, addressing the needs of the AI market. Intel's Foundry division, however, reported a decline in sales, underscoring ongoing hurdles in securing external clients despite significant capital investments required for its operations. The Client Computing Group, which includes revenue from PC chipsets and processors, grew by 5% year over year. The growth comes as Intel capitalizes on a strong upgrade cycle and the rising need for modern processors to support artificial intelligence applications. Why do we care? After all the griefs Intel's taken lately, surprise, they turned a profit. $13.6 billion in revenue, beating expectations, and $4.1 billion in profit. That's their first time in the black in almost 2 years. But let's not crown a comeback just yet. Big chunk of that profit come from the government investment. That's more industrial policy than marketplace victory. Intel's Foundry business, the parts that's supposed to compete with TSMC, is still losing ground, and the company's real wins came from PC refreshes and AI hype. They're partnering with NVIDIA to blend Intel chips and NVIDIA's AI tech. It's a smart move, but also a reminder that Intel can't carry this fight alone. This means Intel's platform isn't going anywhere, and those AI-capable PCs might drive a client upgrade wave. But don't bet the farm on an Intel resurgence. Diversify your hardware stack, keep AMD and ARM in the mix, and watch how Intel's Foundry efforts evolve. That's the real health indicator. The headline looks great, but the patient's still in recovery. TD SYNNEX released its 4th annual Direction of Technology report, which aims to provide a comprehensive overview of the current IT landscape and partner performance insights. This year's report is built on feedback from over 1,400 channel partners across 40 countries, and it introduces two new standardized indices: the Net Growth Index, measuring revenue performance, and the Net Optimism Index, capturing future sentiment. The report highlights a slowdown in revenue growth, with 66.8% of respondents reporting growth over the last year, down from 75% the previous year. Despite these challenges, optimism remains strong, particularly in regions like Latin America and the Caribbean, which leads in future sentiment with a score of 116. The report emphasizes the importance of specialization and collaboration in the face of increasing market competition, as 75% of global respondents identified it as a top concern. Why do we care? Well, TD SYNNEX drops their annual Direction of Technology report, and the headline, "Partner growth is slowing, but everyone's still feeling good about it." About 67% of partners reported growth, down from 75%. That's not a collapse, but it's definitely a cool down. What's new this year are those indices, one measuring how well you're doing, the other measures how good you feel about it. Unsurprisingly, optimism's higher than the numbers justify, especially in Latin America, where sentiment leads globally. And here's where it gets interesting. 75% of partners say specialization and collaboration are their top priorities. That tells me the age of "we do IT for everyone" is over. You can't just be another MSP, you gotta be the right MSP, focused, verticalized, and plugged into the right vendor ecosystem. So what do? Well, benchmark your growth. Pick a vertical or solution area you can own. Use distributors like SYNNEX, not just to buy gear, but to build your playbook. And remember, optimism doesn't pay the bills. Discipline, differentiation, and partnerships do. And that's why we care. Thanks for listening. Today, National American Beer Day and National Black Cat Day. Plus, subscribers are going to get a bonus segment on Kaseya's new release. Want more from the Business of Tech? Join Business of Tech Plus for ad-free episodes, early interviews, extended cuts, subscriber-only shows, and exclusive member perks and analysis. Sign up at businessof.tech/plus. And follow this show in your podcast app, and if you're on YouTube, hit subscribe and the bell so you never miss a story. Reviews and comments help spread the word too. Interested in advertising? Head to mspradio.com/engage. The Business of Tech is written and produced by me, Dave Sobel, under ethics guidelines posted at businessof.tech. Thanks for listening. I'll see you on the next episode.
Part of the MSP Radio Network.